Hello, everyone. This is Dana from NexGen. Thank you for joining us for part 5 of Building the Family Bank. One mishap could decimate our family bank, so I would like to discuss how we protect our generational wealth. As you can see, you can have insurance for just about any and everything. In the description below, there is a link that goes over the different types of insurance. In part 5, I would like to focus on the insurance our family uses. We have health insurance for both expected and unexpected health care expenses. Having health insurance has saved us hundreds of thousands of dollars, and we didn't have to go into debt. We also use care credit to pay for medical expenses not covered by our insurance. Now, we're not sponsored or endorsed by Care Credit. We just take advantage of their interest-free financing when needed. Because we have drivers in the family, we have car insurance. We also use the insurance for roadside assistance and uninsured and underinsured motorists. According to FEMA, 5 inches of water in a home can cause more than $1,000 worth of damages. Although our homes are not considered in flood zones, and flooding is the #1 natural disaster in the United States, we decided to include that coverage in the policy along with replacement costs. Now, one thing I didn't know was that homeowners policy that we had covers the contents in our vehicle. For example, one time our vehicle was stolen and they took valuable items out of the trunk. Well, it was the homeowners, not the auto insurance, that covered the costs of those replacements. We require our tenants to also have renter's insurance. Tenants' belongings are not covered by our insurance. In the event of a flood, natural disaster, burglary, fire, or other mishaps, the tenant's belongings would be at risk. Now, the cost of the policy is relatively low and should bring that tenant peace of mind. We use life insurance not only to pay for final expenses, but to also replace the lost income of those that are dependent upon the income of the person who has passed away, to include paying off their debt or paying any bills. Another thing we use the life insurance for, sufficient life insurance, is to pay the estate taxes so that the heirs don't have to. Now, it can be either whole or term life. We choose the term life insurance, and we usually do those for those that have become adults, graduated from high school, and those types of things. Now, as a business owner, a substantial life insurance policy is used to protect against a business loss. It's basically called a key man policy, and it ensures that if the business partners, key employees are lost in a fatality, the remaining partners would have the financial resources to continue the business and find replacements for those individuals. We no longer take vacations, we take business trips. Our credit cards and memberships include travel coverage, so we check to make sure that we're not paying for something that we already have. There's a difference between paying for coverage you already have, or double coverage, and extra. An umbrella insurance policy is extra insurance for your insurance. For example, let's say you get into a car accident. So my car insurance would pay out and make me whole. Now, let's say that the car crash involved a Maybach. Now, my insurance might not cover that damage. So rather than paying out of my pocket, my umbrella insurance policy would kick in and cover the difference. In other words, the umbrella insurance policy will add extra protection on all of my existing insurance policy in case I'm in a situation where my insurance is just not enough. I hope this information was helpful and you learned something. I look forward to seeing you in part 6. Don't forget to like, comment, share, and subscribe.